All right. So these were the two winning trades that we took today, and then I'll go over the winning trade that I took yesterday. So I had a bullish bias purely based on the fact that we had already got an extension to the downside here. Okay, we already had an extension down, so I'm figuring, hey, we probably need a bit of a retrace. All right, like high time frame. Ideally, I would like to see price retrace up to this equilibrium level. That would be kind of ideal for me. All right. But that's high time frame. Obviously, we're going to be looking into the lower time frame. So from there, on the hourly, we come down, we sweep out these draws on liquidity. And then on top of that, we had two sets of news that came out today. We had flash manufacturing, flash services, existing home sales. Okay. I wanted to wait for this high impact news. Didn't really care about existing home sales. It moved the market a decent amount, but nothing crazy. And then from there, we made a super sexy bullish SMT divergence on the 1 minute, which most of the time I don't take. But in this case, we came through, we swept out liquidity, we invalidated this bearish imbalance right here. Okay. Wait, give me 1 second. I just need to make sure that my ES position has a stop loss at break even. It doesn't. Let me put that there just to protect my shit real quick. Boom. Okay, cool. All right. Now, cool. Because my NASDAQ trade, the remaining just got stopped out at break even. But anyways, so we had that bullish SMT along with us breaking structure to the upside right here. And I was like, okay, I'm pretty bullish on this. But at the time, ES was giving better entries. And the reason for that was this. Okay, so again, this was the low on ES, the low, and then the higher low that was made. And then on NASDAQ, we had this low, and then the lower low was made right here. So SMT divergence off of a liquidity sweep to the downside on high time frame liquidity. That's a pretty freaking good confluence to be looking for longs, along with our overall daily bias being already freaking bullish. So once I saw that, it was really just a matter of time to look for entries. So ES gave the first entry with this candle right here. We sweep out liquidity. We break structure to the upside. We invalidate this bearish imbalance. I went long off this. Stops underneath these lows. Okay, and my first take profit, super shitty risk to reward, but I just wanted to secure some profit off of this range's equilibrium. Oh, wait, what the fuck? Sorry. This range is equilibrium, which we did see. It got hit, and then it slowed down a bit, and I didn't move my stop loss to break even when this got hit. I'm still in this trade. Okay? Now my stop loss is at break even after we made the second leg up and we balanced out price action here. But I hit this. I took off like literally 2 contracts just to secure some profit, and then from there, my final take profit is right up here. I have like 75% of my positions still running to come up here. And this is just based off of these 5-minute highs, along with us coming through already and sweeping out liquidity. This is like a breaker. This up move right here is an order block. I think it's a relatively high confluence area. And, you know, I don't necessarily want to be targeting this super high time frame equilibrium that's all the way up here off this, just because it's a Friday, and I always keep my take profits relatively limited on Fridays. So yeah, that was the S&P trade. We very well could come right back down and stop the remaining position back out at break even. It could be a super low profit day for me. NASDAQ, again, take profit 1 was set based off of really low take profit levels. So now let's get into NASDAQ. NASDAQ, similar situation. We come down, we sweep out high time frame liquidity. Okay, we have this SMT divergence. And then on top of that, we invalidate, boom, this bullish imbalance right here. But we invalidated it all the way up here. And at that time, I saw that ES was giving a much better entry off of this candlestick rather than NASDAQ, like all the way up here. So I was like, okay, I'm just going to wait a bit for NASDAQ to get a push down. We end up pushing down into this bullish fair value gap right here. Okay. On top of that, we're revisiting this bearish imbalance that got invalidated. And then we see a bullish reaction out of that, entered off of that candle, stops right underneath this bullish fair value gap, which I honestly never thought was going to get hit. And then again, take profit 1, super shitty risk to reward ratio. But again, I wanted to secure profit because overall, like on the high time frame, we're pretty heavily bearish, right? I was trying to bank off of a retracement on the 4 hour on the high time frame. And most of the time, as you guys know, like the high time frame on the 4 hour, we're saying like, hey, we're bearish. I got to know that the retracements are going to be short-lived and it's going to be pretty choppy on the way up there. But anyways, we saw this get hit like pretty much like 10 minutes after that. So I entered with super low contract size on this because I was already in pretty heavy on ES. I took 1 contract off of that, moved the stop loss to break even. Full take profit was set right here for a 1-2. Damn, pretty much the same risk reward as the ES trade, and then set my stop loss to break even. This trade got stopped out at break even. Literally only made like a couple $100 off of this. But my ES trade is still alive and active with stop loss at break even right now. I'd love to see it come back up and potentially hit these highs. We could even potentially see. Oh no. But yeah, that's pretty much what I'm seeing right now. Again, when the high time frames are bearish, you kind of want to steer clear of like committing so heavily to your retracement bias to the point where it overlooks what the high time frame is saying. You know, so like there's a reason why I had super limited take profits on this today. I know everyone makes fun of me, says like, okay, there you go, my ES trade just got stopped out for the remaining position at break even. So today was like a super limited profit day. But I'm okay with that because like overall I'm looking at this and I'm like, damn, geez, I'm wired off this coffee, bro. I see this and I'm just like, damn, you know, price is obviously insanely bearish. Would I like price to come back up and fill equilibrium of this extension down? 1000%. But am I going to fully commit to that bias and just be like, oh, we need to be bullish no matter what? Not necessarily, right? And that's pretty much what I did. I set super limited take profits. It ended up working out for me. So yeah, the rest, I don't know why I got stopped out at break even. My entry was a little bit lower than that. Little bit peculiar, but whatever. But yeah, that's pretty much it. Trade recap done for today. Oh, tripping. We need to go over the trade that I took yesterday. If I can even remember what that was. I think it was on NASDAQ. NASDAQ, smoking on a gas bag. Let's get rid of all these drawings. Yesterday's trade recap as well. Yesterday was Thursday. I had a bullish bias yesterday as well. Wait, let me make sure. Wait. Bruh, it's so annoying. Whatever, I'm literally just gonna have to go in and find the shit. Okay, so this again, I had a bullish bias because the 4 hour was obviously bullish, and before market ended up shitting itself, we were within a discount. We were also within 4 hour equilibrium. Within a discounted price range, same thing here on the 4 hour, within that imbalance right here. I'm wired off this coffee, bro. Like, not in a good way. I literally can't even think. I need to chill out. But anyways, I took my trade. Oh, yes. Now I remember it. My bias was originally bullish, and I wanted to stick to that even though, like, after price had sold off heavy. I took this trade while I was at the gym and off stream, but we ended up coming down, sweeping out this liquidity down here, and I saw it as an obvious liquidity sweep, so I was like, bet. Least we can do is come through and fill out equilibrium here on this after like just selling off so heavily. And I entered purely off of liquidity sweep, invalidation of bearish fair value gap, and bullish fair value gap getting filled. Long off this. Stops were right here. Take profit was right here. And that was it. Again, shitty ass risk to reward ratio. I think I actually had 2 take profits on this. I need to go back to my here it is. Okay, so my entry was like the middle of this candle. Damn, so a better risk to reward. Except actually, my first take profit was off these 1 minute highs, and then final take profit was based off this equilibrium. So again, pretty shitty first take profit. Literally a 1 to 0.58 risk to reward ratio. I took off 2 contracts here, let the rest run up to this equilibrium, and it was purely just based that, hey, we hit high time frame liquidity. We're bound to at least take some profits here and retrace to this low ass time frame equilibrium, right? We take out high time frame liquidity. We see profits getting taken through bullish confluences. The least we're going to do is come up to this equilibrium. Okay, but anyways, there we go. And here I can show you guys. This was the entry. You can see that if you guys can even see the shit, you can see where I exited. It's the same as I told y'all. So there you go. Yeah. Solid ass trading past 2 days after a pretty shitty start to the week. Anyways, I appreciate y'all. I'll catch the mastermind jits at 1 a.m. or 1 p.m. Peace out, boys.